9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. We are live for you at the Asian Financial Forum. I'm Yvonne Man with David Ingles.
Good morning. We are counting down to the open of markets in Greater China. Let's get to your top stories today. We're looking at currency markets, the yen extending its gains with traders on intervention alert after the Prime Minister's warning and signs of possible U.S. backing. Gold, as you can see, topping $5,000 for the very first time.
President Trump ramping up pressure on Canada, threatening 100% tariffs if it makes a trade deal with China.
Also ahead, China investigating its top general, Zhang Youxia, as Xi Jinping's military purge deepens.
And the U.S. government faces a potential shutdown as Democrats threaten to block spending after a second deadly shooting by ICE agents in Minneapolis.
Good morning. Happy Monday. Welcome to the China Show. Lots to discuss over the next 2 hours or so. We're live here, of course, at the Asian Financial Forum. So lots to discuss as far as the outlook for Hong Kong's role and how that evolves in 2026, given all the changes we're seeing across asset preferences and the like. In fact, speaking of that very topic, gold is going to be a very big topic of conversation today. We mentioned topping 5,000 for the very first time. The other big market story was really one that largely was expected. We didn't expect it to come on a weekend. The warnings coming through out of the Prime Minister, and hence why we are seeing the yen continuing to strengthen from about 159. We're sub 154, and the key crosses on your screens. What that's leading to is really this broad move lower in the US dollar against Asian FX, right? Whether that's the ringgit, the Sing dollar, the Korean won, or also the time when these currency coming up on your screens and fairly steep losses, as you can see, as far as the dollar is concerned. And dollar China fix will be in focus, of course. We're 694 last we checked. Equity markets, stronger yen, weaker Japanese equity market coming up on your screens. The Kospi Index, US futures, and the Asia Pacific benchmark at the very bottom of your screens. It's Fed week. We'll get to that in a moment. The 2s and 10s in Japan and also on treasuries coming up on your screen. Not that we're expecting anything from the Fed this week, but we'll sort of look into the nuance of what to watch out for specifically as far as that's concerned. And yes, by the way, yes, another one that's crept up is the shutdown concerns. Speaking of precious metals, gold, silver, platinum, and palladium. Silver, of course, 5,000 in gold and triple digits. In fact, even more, $106 now on silver. A50 futures coming online. And oil, of course, and separately, because of that extreme cold weather in the U.S. and in Canada, gas futures are punching through the ceiling. So certainly something to watch and just consider as we try and make sense of all these moves very early this Monday.
Yeah, it's interesting, right? When you have the likes of the Federal Reserve Bank of New York and Bank of Japan talking about checking the rate of the exchange rate of the yen, certainly that does send a lot of signals that maybe, possibly, we are seeing some sort of coordinated effort in terms of intervention from the U.S. and Japan, which we haven't seen, right? I mean, we haven't seen
on the U.S. side,
from 2011, right, when there was the Japanese earthquake. So certainly they don't usually do this. I think it's only 3 times since 1996. So the market is certainly listening. You bring it back to kind of what we're seeing here at AFF, because there certainly is a lot of discussions about creating new horizons amid an evolving landscape, right? That's
what does it mean? What does it mean?
I think for Hong Kong, certainly it means, what does it mean for promoting cross-border investment between the mainland and Hong Kong? We certainly have seen that when it comes to the IPO market. This whole theme of going global from mainland companies, as Chris Wei, the Financial Services Treasury Secretary, mentioned, that's still a key theme here today. And of course, can Hong Kong become that gold trading hub as well, given the time when we're having 5,000 when it comes to bullion?
Yeah,
quite timely.
What are the plans of Hong Kong, right, to just build out the infrastructure needed for it to create that hub? And I think so. Just right next to Yvonne and myself is the main hall, of course, at the AFF, and I believe speaking right now should be Frederick Ma. And then we have John Lee, of course, set to speak, and then Joe Lan out of the PBOC, the deputy governor there. And of course, speaking of Christopher Hui, who we just talked to about 40 minutes back, here's what he had to say specifically on the plans, Hong Kong's plans, as far as this gold hub is concerned. What to watch out for? Have a look.
I think gold right now is really a topic for everyone, globally and regionally. And we are going to sign an agreement with the Shanghai Gold Exchange later on at this forum to highlight the fact that we are cooperating with them to set up a government-owned clearinghouse in Hong Kong for OTC gold contracts.
Yeah, there we go. So 3-year plan to build up that capacity. 50% will be under the airport authority, and of course the other 50% will be, of course, not a lot of details were disclosed where the location of that of the vault is concerned.
But that MOU with the Shanghai Gold Exchange, right, that's going to be signed here at the AFF this week. So something to look out for here on what that clearing mechanism is going to look like as well for the city. So certainly there's a lot that could be happening here in terms of deals this week. And we have a strong lineup of guests here to talk us through some of those key themes. As we mentioned, we're speaking to Morgan Stanley's Asia CEO, Gokul Laroia there. First up here on the China Show, and the head of the World Gold Council as well. We'll also hear from Federated Hermes and Blackstone's APEC head of private wealth. Those conversations at the Times on your screens.
Okay, let's get back to the market action and bring in Mark Cudmore, our MLive executive editor, joining us right now from Singapore to talk us through these big market moves. And Mark, here we are. How close are we to actual intervention? Just help us understand that spectrum of steps.
We obviously don't know exactly when or if we'll even definitely get physical intervention. As you highlighted in the intro, it was slightly unusual how the rate check came on Friday. That is the normal procedure ahead of physical intervention, is that normally the MOF will do a kind of rate check. Normally they might execute via the Bank of Japan, but it's the MOF who make the decision, and they'll kind of go, where do you see dollar yen? And it's a hint they're getting ready to intervene. As you've highlighted, they have gone through the Federal Reserve Board of New York before, depending on the time difference, but that is unusual. It's not the most common way of doing it. I think the last time, as you mentioned, was 2011 post-Fukushima earthquake, but since that's kind of slightly unusual. The more unusual bit was, in fact, that they said explicitly when they did the rate check that they wanted everyone to know about it. So they said, make this public. And normally they do these rate checks because they want people to know about it, but it's normally leaked out. It's kind of, people familiar stories, whereas in this case, it was like, hey, please tell everyone out there. So this was quite unusual, and it's fueling a lot of speculation about what's going on. I need to emphasize that word speculation, because really we're all in the dark right now, and there are very few extra concrete facts beyond what I've just given there, so we don't really know what the next step is.
Okay, so for dollar yen, do you think we've seen a peak or a high, at least, with or without intervention? That certainly is the case, or view from Elias Haddad from Brown Brothers, Harriman. What's your take on where dollar yen goes from here?
Yeah, I think dollar yen goes a chunk lower this week. Hedge fund speculative positioning was short yen until last week. The latest positioning data we get is from last Tuesday. They were net short as of then. Suddenly, there's an attempt to put a floor in place for the yen, or a ceiling for dollar yen, if you want to put it that way, by the officials, and therefore hedge funds are going to want to switch positioning. So I think there's going to be a lot of flow to buy the yen this week, and so therefore I think dollar yen ultimately goes a lot lower. But there's another important component here. I don't even think that the yen will end up being the bigger story here. I think that there's a very strong chance that the big story this week is actually the dollar side. I think the broad dollar weakness can really be expected. We're going to expect FX hedging ratios to increase from many countries, and there's this quiet quitting of US assets. We've seen US stocks underperform significantly over the past year, and I expect that to pick up pace again. So I think we're going to keep on seeing broad dollar weakness. And already this morning, one of the things that's quite unusual is that, in fact, that while dollar yen's obviously come lower, and that's understandable, we're seeing, for example, European currencies do wonderful against the dollar, most prominently euro dollar, which, there's less of a fundamental argument here why that should suddenly be surging. And that makes the point that there's definitely a broader trend to diversify into dollar. And that's driving a lot of the asset moves we're getting out there, including the crazy moves in precious metals, for example.
Mark, yeah, I was going to ask you, actually, does that even further this precious metal space? But I think we've answered that. What about the equity market overlay there? What does it mean for equities, if at all?
I think it's going to be a tough week for stocks. I think that the extraordinary moves we're seeing in markets, what they do is they raise volatility measures, and that feeds into value at risk measures, which is how most traders, funds operate, is they're only allowed to work within value at risk limits, which is based off implied volatility measures. So there's literally a mechanical system, while as we get more volatility across the board, people have to de-risk slightly. So I think that's one of the dynamics we're getting at the moment. These extraordinary moves in precious metals and now FX are going to raise volatility. We already saw rates, extraordinary moves in rates markets last week. So I think it's going to be negative for stocks. Now, adding into that, the government shutdowns come into focus. We've obviously got the FOMC. We've got suddenly, the US talking about 100% tariffs in Canada. There's no shortage of negative news stories to kind of fuel that narrative. So I think it's going to be a tough week for stocks.
Mark, thank you. Mark Cutmore there in Singapore, AmLab executive editor. Hopefully he's there to hold our hands throughout this volatile week here as we count down to not just any signs of intervention from Japan, but also that Fed decision. So that really kind of is the key when it comes to the week ahead here today in terms of eco macro stuff. Obviously, we have also the Goldman Sachs macro conference that's happening on Tuesday here in Hong Kong along the lines of AFF there. Also, that Fed decision that happens on Wednesday. We're going to get some inflation numbers out of Australia and Philippines GDP as well. So lots to look ahead to as well. Obviously, we're seeing those opening remarks here at AFF. The chief executive of Hong Kong, John Lee, is making that keynote speech here at the conference here. And really, the pitch continues to be, we're open for business. And, we really want to promote mainland companies heading abroad, going overseas, and going global.
The number of foreign
Welcome back. You're watching The China Show. Let's get to one of our top stories today. So China is investigating its top general and Politburo member, Zhang Youxia, for serious disciplinary and legal violations. Let's bring in John Liu, our Greater China executive editor, joining us now to talk us through what we know so far about the story. Yeah, John, what do we know?
Well, we don't know very much, David. What we know is that over the weekend it was announced that the Zhang Youxia has been removed, that he's being investigated for serious breaches of conduct. We've had a commentary in the PLA Daily, which is published by the People's Liberation Army, accusing him of trampling on, among other things, Xi Jinping's ability to govern. So that's raised lots of questions about what is going on in the background. Chinese politics, especially at the senior level, is very, very opaque. And so this has come as a big surprise. No one expected this. And now everyone's trying to figure out why and what does it mean for the future.
And it certainly seems to leave the decision-making body of the PLA a bit more vulnerable now when you have that top general now being investigated. Where does that leave kind of succession plans? I mean, it sounds like, Zhang had a very deep relationship with the president as well.
So this was a man who had a close relationship with Xi Jinping. Their families go back to the revolutionary days. Their fathers fought together. And so they were always seen as being close allies. And so this is another reason why this move is so surprising and so unexpected. The military is run in China by the Central Military Commission. In 2022, after the Party Congress at the end of that year, the latest iteration of that committee was announced with 7 men. Right now, only 2 of those men are still on that committee. Everyone else has been removed and is put under investigation. The only 2 men remaining are one other general and Xi Jinping himself. And so that raises questions about the ability of Xi to govern. Does it show that Xi is finding it hard to find people he can trust? Or does it show that Xi really has an iron grasp over power and he can remove people as he sees fit? And so that's sort of the question that everybody's trying to come to grasp with and trying to figure out which of those 2 it is.
We'll leave it there. John, thank you so much. John Liu, our Greater China executive editor, with what we know and what we understand, perhaps, of the potential broader implications of this. Let's just get to the FX in focus, certainly given the news out in the weekend from the Japanese. It's having really just effects across the FX space today. Hence, we're looking at this weaker dollar and hence the very strong fix coming through out of the PBOC on your screens. Market's not reacting, as you can see. This is, though, in context, the strongest fix going back to May of 2023. And of course, late last week is when we breached that 7 handle to the downside on the fix for the very first time since that point in time.
Yeah, because a lot of the discussions here on where things stand when it comes to the currency and trade. And when you see the rift that seems to be widening between the U.S. and Canada, right? We certainly saw some announcements as President Trump threatened 100% tariffs on Canadian goods to the U.S. if Ottawa makes a trade deal with China. For more, let's bring in our chief North Asia correspondent, Stephen Engel. He joins us, of course, in our studios. And where do we stand now in the whole situation, Steve?
Well, we had a barrage of social media posts from President Trump and others, in Canada have taken a little bit more of a cautious and not necessarily inflammatory response. Maybe they're thinking maybe this is another taco example from Donald Trump and that this is just basically brinksmanship from the White House. But again, it's quite alarming considering how intertwined the two economies, Canada and the United States, are. And they thought they had sort of come to an understanding on that relationship, the trade relationship, as it relates to auto parts, huge auto parts industry in Canada that the U.S. Auto factories rely on. America is the big purchaser of oil, also metals, also fertilizers. So it raises a lot of questions about whether Trump is serious here and whether he would follow through on what he's saying would be 100% tariff on all Canadian goods exported to the United States. Donald Trump, in some of these posts, saying China will eat Canada alive, completely devour, including its destruction of their business, social fabric, and general way of life. He goes on to say, if Mark Carney thinks he's going to make Canada a drop-off port for Chinese goods into the United States, he is sorely mistaken. So again, the Canadians have come out fairly measured response. We had the Minister for Trade responsible for the United States, Dominic LeBlanc, essentially saying they are not pursuing a so-called free trade agreement with China. What Mark Carney about 10 days ago or so in Beijing signed were a few deals to essentially, what he says, alleviate the more pressing tariff issues like the EV tariff, which, of course, China wanted to have repealed. It went from 100% to 6.1% for 49,000 Chinese electric vehicles into Canada. Of course, the Trump administration wants that 100% to remain. So they're in lockstep together, the two main economies in North America. Also, but China reciprocated by removing their 100% tariff on rapeseed or canola, a key crop from Canada to China. So that's what the Canadian position is right now. We'll have to see, though, if the Trump administration ups and persists with their threats of 100% tariffs.
Steve, not that this should come as a surprise, but we did also hear the Treasury Secretary doubling down on that threat. What did Scott Bessent say exactly?
Yeah, well, this is a fairly common pattern, if you will. Donald Trump will make these comments on social media, and then Scott Bessent will make the rounds of Sunday television programs, which he did again. And he essentially is saying, now, if this goes beyond what is already announced between China and Canada, the United States will have the right to essentially add more penalties, not only including tariffs, not only on Canada, but on China as well. Let's listen to Scott Bessent.
We have a highly integrated market with Canada, sometimes in autos, which he dropped the EV tariff, I believe, from 100% to 6%. The goods can cross the border during the manufacturing process 6 times. And we can't let Canada become an opening that the Chinese pour their cheap goods into the U.S.
Now, Bessent also raised the prospect of possibly renegotiating this summer the U.S., Mexico, Canada trade agreement, but he did not elaborate on whether these latest developments would impact that. One would assume it probably would. Meanwhile, Canada is not holding back on making its overtures to other economies. We have the energy minister heading to India soon. We have also Mark Carney expected to make a trip to India at some point, as well as Australia in March.
Steve, thank you. Stephen Engel in our Hong Kong studios for us and the latest on that specific front. Here are some other major stories from around the world we're tracking this hour. Let's get you guys updated on, of course, certainly the events that you probably have seen already in Minnesota. Outrage is growing in the U.S. It's after a Border Patrol agent shot and killed a man believed to be a U.S. citizen in Minneapolis on Saturday, and officials say the victim had no criminal record. Senate Democratic leader Chuck Schumer has vowed to block a massive spending package unless Republicans strip funding for the Department of Homeland Security. Now, the move raises the risk for a partial U.S. government shutdown.
Some congressional Republicans are also showing signs of wavering on Trump's immigration crackdown. Andrew Garbarino, House Homeland Security panel, has requested public testimony from top immigration officials, while others are calling for an investigation into the shooting. And over 60 CEOs of Minnesota-based companies are calling for a de-escalation of tensions. The heads of companies, including Target and General Mills, were among the signatories of a letter shared on Sunday. State and city officials have repeated their calls for federal agents to leave and demanded that Minnesota's authorities take over the investigation into the shooting.
Right, welcome back. Just under 5 minutes to the opening bell this Monday as we kickstart this fresh trading week, where the big story is really the strength in the Japanese currency leading to strength elsewhere, really a weak dollar, and a really strong bid coming across precious metals. What's new anyway?
Yeah, continue to see gold around that 5,000 level. Maybe we're heading higher, we'll see. But today it really is kind of that rush to kind of buy Asia FX, given the dollar moves we've seen, right? Take a look when it comes to stocks to watch here. So we're watching China Tech, Baba, Tencent, Baidu, and JD. Just given some of these risk-on moves we're seeing across equity markets, you are seeing mostly higher, at least for some of these big tech plays here today. JD is up about 1% here. Baidu is heading the opposite direction. Chip stocks as well. We're watching some of these local players alike. Certainly there's been a lot of optimism here at AFF about the IPOs and what we've been seeing. We're getting Morgan Stanley's MS, well, I should say, the agency joining us there.
Through, yeah.
To tell us more about that. The Open is next. This is Bloomberg.
Good morning, welcome back. You're watching the China Show, counting down to the open of markets this Monday. And as you can see, we are catching a decent bid across these markets. Keep in mind the backdrop specifically in Hong Kong was that wobble in the afternoon session on Friday following the Bloomberg scoop, of course, that China might be looking to tighten some of the scrutiny over these IPOs coming here to the city. And we have really almost the perfect lineup of guests, actually. Let me just unhedge that, coming through here. Out of the AFF and our coverage here to maybe help us understand what really is going on as far as that's concerned. But that seems to be put it on the back burner with the yen being the
the yen certainly just kind of catapulted to our top amidst this AFF coverage that we have. We're bringing the China Show, of course, on the ground here at the convention center. But yeah, when you're talking about dollar yen at 154 levels, we haven't seen that for some few weeks now, given what we've been hearing, right? These intervention risks that we're hearing over the weekend as well. You got to wonder what was discussed in Davos between the finance minister of Japan, Katayama, and Scott Bessent. You know, the people are interpreting this as maybe more than just a fluke, right? That maybe we're seeing something more coordinated between U.S. and Japan.
And it's something that it's one of those times where you're brushing off that 101 on the steps of yen intervention. And the U.S. will need to be on board of any sort of direct intervention as far as that's concerned. We don't even have to get to that point for markets to listen. Certainly markets are listening at this point in time with, as you can see, from 159, we're sub 155 right now on Jolly. We're also seeing, by the way, quite a sharp dip in the yen against the Chinese currency, against other currencies, which is leading cross-asset as far as this weaker dollar is concerned against the rest of Asian FX. But yes, that is a story in FX markets and precious metals. Equities, though, are somewhat unscathed with the exception of what's happening in Japan.
Yes, right. That stronger yen is certainly hurting some of the exporters there, and that's why we are seeing Japanese markets in negative territory here this morning. The Hong Kong dashboard's looking like this here today. Certainly want to get Morgan Stanley's Asia CEO, Gokul Laroia, there in just a few minutes. Tell us through, they ranked #1 in terms of the global league tables for IPOs last year, what he's seeing in terms of course, the pipeline, fees when it comes to, of course, maybe the possible tightening, of course, as Dave mentioned, our scoop on Friday, when it comes to the quality of these deals now. HS Tech is on offer here today, just slightly. It seems like it's being led by the likes of Baidu and Xiaomi here today, but the rest of the big tech plays are still doing okay. MSCI China is up about 1/3 In terms of individual movers, we're still tracking the likes of PopMart. So that CEO interview on Xinhua on Friday seems to have continue to move markets here, right? So the CEO on Ning saying further growth for La Bubu brand.
Oh, no.
So, yes. David's favorite topic. We're up 3.5% for PopMart here.
Couldn't sleep last night.
And continue to defy, really. People are still trying to kind of short this stock, I think, despite the buybacks that we've seen from this company of late here. So certainly maybe there is a bit of a short squeeze to talk about as well. Gold stocks are certainly still in favor here, just given what we've seen, 5,000 when it comes to bullion that was hit. There's going to be a lot of talk at AFF about the gold trading hub that Hong Kong wants to achieve here and really try to compete with the likes of London, which dominates when it comes to, of course, the trading of bullion. So the infrastructure, the capacity, certainly we did speak with Christopher Hui, Financial Services and Treasury Secretary here about the 2,000 tons capacity they're aiming for the next 3 years or so. But right now we're taking a look at some of these local chip stocks as well. They are falling slightly here this morning, Dave.
Okay, we will take you straight back into the main hall beside where we are set here at the Asian Financial Forum where the PBOC Deputy Governor, Zhou Lan, is speaking. Let's listen in.
Business sectors including equities, bonds, currencies, derivatives, and gold. In terms of capital market, Bond Connect has boosted Hong Kong's influence. Now we have over 800 financial investors investing through Bond Connect. The bond position has increased to over 810 billion RMB, a quarter of the total holding of mainland bonds by international institutions. In 2025, the transaction volume was 9.7 trillion RMB, 60% of the total transaction by international institutions. At the same time, mainland investors invested in different foreign currencies through the Bond Connect. Now they have held over 1.2 trillion RMB. In terms of equity market, the Connect programs have expanded its size. Currently, mainland investors have had a position of over 6 trillion Hong Kong dollars through Stock Connect, and international investors through the market of Hong Kong have held over 2.5 trillion RMB of mainland A-share stocks. In terms of currency market, repo programs have boosted the appeal of Hong Kong's market. In February and October of 2025, PBOC and Hong Kong Monetary Authority have worked together to promote the offshore repo and cross-border repo business using RMB bond. Now we have 34 international institutions involving in the repo program, amounting to 119 billion RMB. 46 international institutions have started their cross-border repo business worth 150 billion RMB. In terms of derivatives market, Hong Kong has been increasingly an important market. 87 international institutional investors have started a currency swap business. The transaction exceeded 9.9 trillion RMB. In terms of gold market, Hong Kong Gold Exchange set up the Hong Kong delivery market and the launching of relevant contracts, giving more options to investors in offshore asset allocation in RMB. With increasing use of RMB in cross-border transactions, RMB as a financing and currency reserve vehicle have seen much more appeal. RMB has been the second largest trade financing currency and the third largest payment currency in the world, and it's ranked the third in a basket of currencies in special drawing rights of the IMF. PBOC is working closely with HKMA in building the mechanisms like International RMB Settlement Bank and currency swap systems. And we have regularly issued banknotes issued in RMB in Hong Kong. Hong Kong has already been the largest offshore RMB business hub in the world. Now, the PBOC is poised to advance Hong Kong's role in building an offshore RMB market. We will also increase the volume of RMB liquidity, offering more support to the offshore market in Hong Kong. In October 2025, Hong Kong Monetary Authority will upgrade its liquidity tool to a regular arrangement mechanism with a total size of 100 billion RMB. We will expand the support scope of liquidities and facilitate its use. We have received very good feedback from the market. To better support the market need, HKMA will increase the facility to over 200 billion RMB. At the same time, to support Hong Kong's role as an international RMB settlement center, through different ways, we will acquire liquidity in RMB with different durations from the mainland market, so we can increase the liquidity of Hong Kong, Hong Kong's offshore RMB. Secondly, we will continue to expand the connection and collaboration between the two international markets. We will offer more risk mitigation tools, and we will improve on Bond Connect and Swamp Connect, among other mechanisms. We will also explore the launching of RMB Treasury futures in Hong Kong, and we will explore the possibility of using RMB bonds as an eligible liquidity a pledge for offshore market, and we will advance the mutual recognition of infrastructure cross-border. Thirdly, we will offer more offshore RMB treasury products to increase market liquidity. To meet the need of international investors for high-quality RMB assets, PBOC will work with other government institutions in increasing the annual quota for offshore RMB treasury, and we will improve on the market-making system for offshore market so we can offer a better pricing capability by RMB. Fourthly, we will support the development of Hong Kong's gold market, increasing the appeal of Hong Kong's offshore RMB market. We were very pleased to witness the signing of cooperation agreements between Hong Kong's Financial and Treasury Services Bureau and Hong Kong and Shanghai Gold Exchange. We will, through different ways, support Hong Kong in building itself into an international gold exchange center to strengthen its connection with the international gold market. Hong Kong has the banking of the motherland, has connection of the world. It has an important advantage and an important role. PBOC will implement the instructions from the CPC Central Committee and the State Council in deepening the pragmatic cooperation with Hong Kong so we can support Hong Kong in its stable development amid changes. And in this new era with challenges and opportunities, we will win together. I would also like to take this opportunity to thank everyone for your support to China's international financial market. In the end, I wish the forum every success, and I wish Hong Kong better progress in building itself into a better international financial center. Thank you.
Thank you. 谢谢. Thank you very much to Mr. Zhang for speaking to us about the gold collection. collaboration.
Very well. Look, you guys.
I would now like to invite Mr. Christopher Hui, Secretary for Financial Services and the Treasury of the Hong Kong Special Administrative Region Government, to come to the stage.
All right, you were just listening to the PBOC Deputy Governor Joe Lam. They're speaking at the AFF here in Hong Kong and really kind of talking about what Hong Kong has really carved out for itself, right? A super connector, a way to really kind of promote cross-border investment between the mainland and Hong Kong. And he talked about some ways to do that, right? To boost liquidity for the renminbi market, for example, here in the city. Also, when it comes to the bond market, right? To improve the bond connect and swap connect. So maybe we'll hear some news here this week too as well.
On top of the actual deal that we're expecting to be signed, of course,
gold,
this week on gold, right? And that cross-border clearing mechanism that will be chaired, I believe, by Christopher Hui, who joined us earlier on the show. So really, in terms of just Hong Kong opening up its further avenues as a hub here, and certainly it's a conversation we'll continue to have here. But on top of that, obviously we've started the year very hot as far as the IPO market's concerned. You were keeping count. I haven't been able to keep count.
On what? $4 billion already raised this year.
Right? Was it $37 billion, I believe, last year?
Yeah.
Somewhere around
well, made number one, once again, in terms
yeah.
of global IPOs. So certainly Morgan Stanley was the top in terms of really being in the league table. So certainly we have more coming up from the AFF there, where the Asia CEO is going to be joining us to discuss, of course, the pipeline here in the region. That's next. This is Bloomberg.
You're watching The China Show. David and Yvonne just having a few technical difficulties. But in the meantime, Hong Kong is planning to launch a gold futures contract. That's as part of efforts to advance the city's gold hub ambitions. Its Financial Services Secretary, Christopher Hui, spoke to us earlier on Hong Kong's priorities.
We are focusing on 3G, I would say, the priorities. Number one is growing the competitiveness of our market, including on the capital side and also the asset management side. On the capital market side, we're going to review our listing rules, including the arrangement right now for the listing of weighted voting right companies. And at the same time, we are going to bring the clearing cycle of our stock market from T+2 currency to T+1 and get the market ready for that. And on the asset management side, we are going to enhance our current tax concession for funds and also family offices to include digital asset, private credit, and also carbon credit. So this is something that already we are consulting the market. And another thing that we're working on asset wealth management is on the corporate level in terms of reviewing our current laws applicable to the corporate treasury centers. So all these are grouped under the first G, I would say, growing the competitiveness of our own market. The second G, I would say, is about gold, because I think gold right now is really a topic for everyone, globally and regionally. And we are going to sign an agreement with the Shanghai Gold Exchange later on at this forum to highlight the fact that we are cooperating with them to set up a government-owned clearinghouse in Hong Kong for OTC gold contracts. And the third G that I would like to cover is about helping Chinese companies going global. Because after all, as you can see, the immense competitiveness and also productivity of Chinese companies, in fact, is getting a lot of credibility regionally and globally. And Hong Kong being a professional service center, not just financing, but even legal, accounting, and others, basically is a perfect platform to help these companies going global.
Yeah, I mean, it's been so strong for just the start of the year, right? 11 IPOs. I think they've raised already $4 billion just the
We're
first
not even
3
done with January.
weeks of this year. You mentioned about finding the right companies to list. Our sources are hearing that from the CSRC and regulators are a bit concerned over the deal quality of some of these mainland companies listing here in Hong Kong. What have you heard so far? Any signs, if any, of tightening?
I think, as you said, we are yet to finish January. We already have 11 listings so far this year. And also we have a very strong pipeline of more than 350 companies awaiting. So if you look at the figures, basically, like the last year compared to the year before last, in terms of number of new listings, we have almost like 70% increase. But in terms of IPO proceeds, we actually see a almost 2 times increase. So you can see that the companies that are seeking this in Hong Kong are getting bigger, and also the offerings are also bigger as well. So on that front, we have been seeing a strong pipeline, as I highlighted, and also we have been maintaining constant dialogue with our counterparts in the mainland to make sure that Hong Kong is the right platform to serve both mainland companies as well as global companies to list and also seek financing.
That was was Hong Kong Secretary for Financial Services and the Treasury, Christopher Hui, speaking with us earlier. And if you're a subscriber and you want to re-watch that interview, you can, of course, via our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages, so do check it out at TV Go. We'll have more ahead. This is The China Show.
You're watching The China Show live at the Asian Financial Forum in Hong Kong. And I think we've been talking about just how optimistic everyone has been here when it comes to the IPO pipeline and the like here. Someone that has really kind of seen it all, the whole wave that we saw last year, was Morgan Stanley. The Asia CEO, of course, Gokul Laroia, joins us here exclusively on The China Show. Gokul, it's great to have you back on the program. You set a pretty interesting sort of goal, right? Last year, about 10 billion in revenue within 5 years. You were pretty close to kind of hitting it basically last year, and maybe kind of moving that goal much sooner than expected. In terms of the deal flow in M&A and IPOs, how sustainable do you think it is?
Look, it's been well, first, thank you for having me. Appreciate it. It's been a really robust environment. Capital markets, M&A, the wealth management business, and even geographically. So China's been super strong, Hong Kong, China. Japan's been busy, India's been busy, and then the rest of the region, Taiwan, Korea, just given what's happening in the world with the AI dynamic, these are direct beneficiaries of that underlying thematic, which is a really powerful one. So business has been busy, business has been good. We're not changing any goals, but we're close.
Yeah, you're very close. Well, I guess to the point you just made there, do you think we're just scratching the surface on this AI fundraising extravaganza? Like, what are you seeing as far as your clients and how your conversations across the region?
I mean, look, it's a powerful thematic, right? And the infrastructure needed to actually create the platform for full realization. And you know, the perspectives are a little different depending on which part of the world you look at. The investment that's happening in the U.S. far greater than the investment that's happening anywhere else in the world. But if you think about it globally, I think the point you mentioned about scratching the surface is a good one. If you think about it in China too, the thematics that are emerging, you know, AI infrastructure, AI adoption, localization of the semiconductor supply chain, we're just at the very beginning. Industrial automation, robotics, humanoids, etc. We're just at the beginning of this. So I'm excited about it. Our investors are excited about it. Our bankers are excited about it. So, you know, usually when you get too excited about things, they don't quite work out that way. So is there a risk? Absolutely there's a risk. But to me, that's not different from what we've seen in the past. Whenever you have technologies that revolutionize, you know, at the risk of being a little bit dramatic, that revolutionize the world, you know, there will be some misallocation of capital, there will be overinvestment, but broadly, I think we're onto something over here.
Is that overinvestment? Is that likely going to be in the debt markets? Because we saw a lot of, you know, in the U.S. at least, a lot of issuance and a lot of, you know, financing there when it comes to AI. How are you seeing that play out in Asia in terms of AI financing now?
I mean, the levels of investment, as I mentioned earlier, in this part of the world, meaningfully less than what's happening in the U.S. And I think that's a different approach to what you need to build and how you need to build it and what capacity you need to have. At this point, it's a little unclear as to who's right. We'll figure that out. But so there's, by definition, less of a chance that there's misallocation over here because there hasn't been that much investment. But you know, what excites me about this whole thing is that, you know, we've done some math, and this is obviously theoretical at this point, but if AI plays out the way it's going to play out, just for S&P 500, there's approximately $1 trillion of efficiency, whether that's through enhanced revenues or savings in costs. And then if you capitalize that expansion in margins, the value creation is pretty dramatic. So yes, there's been a lot of chatter about this $3 trillion spend number. But if you capitalize the savings, the returns are well and truly spectacular. Now, I don't think it's going to be linear, and that is going to continue to sort of get better. There'll be ups and downs. But I just think about Morgan Stanley and how we're thinking about it. And when I look back to front, the use cases and the impact these use cases can have on our business, pretty exciting.
I want to ask you too, speaking of deals, you guys topped the league tables last year, I think globally and even the Asia Pacific. So what are you seeing early in 2026 as far as equity pipeline is concerned?
So in Asia and China and India are the two big markets for the IPO pipeline. Last year, Hong Kong obviously was incredibly exciting, close to $40 billion. We haven't seen that in a while. And if you think about where that came from, it's really these thematics. Biotech, the innovation is actually world-class. Industrial automation, we spoke about AI, the metals and mining space, obviously really, really hot right now. So it's a continuation of that. So there's going to be more of that. There's going to be more in India. And then Japan's getting increasingly busy. So three big economies in the world, and obviously in Asia, all have some exciting stuff going on.
There's been a clear sort of fee compression among investment banks, and you guys have advised on the CATL listing, which was known for have low fees amidst this kind of competition domestically with Chinese brokerages. Do you see this as sort of a new norm in some ways?
I mean, look, the truth is it's been happening for a while, it's a part of our business that we don't like, but it's the reality of life.
Has it started to impact your revenues?
It's kind of stabilizing. We haven't seen dramatic fee compression over the last couple of years. I mean, it's been happening consistently. I think we're at a point now where we're going to stabilize.
Okay. Do you think we've hit a bottom?
I think so. I mean, I say that and it'll probably go down again, but I think we're close.
Okay. And are you noticing that, just the nuance, are you noticing that, is it across the board or is it down to specific deals? Not we'll get into specific deals, but I wonder if we're making too much of it.
I think it's more systemic, but it's at a level which is still pretty constructive for us. Otherwise, we wouldn't be in the business. Yeah.
Right. Yeah. A good problem to have, I think, if you think about things have come alive in terms of volume, right? And I think we were talking during the break. We had this report on Friday. China is mulling, based on our reporting, tightening some rules over listings here, specifically in Hong Kong. Have you heard anything along those lines? What do you think that's about?
Yeah, I mean, look, you're right about volume. Volume is, and we spoke about it a little bit, volume is quite robust. And the expectation is that continues. And if you think about the number of companies, and certainly sticking to China for a second, the number of companies in China that want to come and list in Hong Kong is at record levels. So what you're referring to is probably in part an issue of capacity for everyone, regulators, other intermediaries. And I think it's good discipline to slow things down a little bit just to make sure that quality is not compromised, because Hong Kong in particular very focused on that. And I think both the Chinese regulator and the Hong Kong regulator super focused on that. So I think it's more that than anything else. I don't think there's any change of direction in terms of the best Chinese companies that have global ambition come and list in Hong Kong, and Hong Kong being the financial center for Chinese companies looking to go global. That hasn't changed.
Okay.
I think the administration just wants good companies to come, and the intermediaries that work with those companies need to sort of check all the boxes.
Just looking broadly here in terms of the trading business, how's that shaping up? I mean, we started 2026 with the Trump administration's second year very different from the first. How are investors positioning around these policies now?
I mean, look, the volume, if you just think about volume as a barometer, it's higher than it's been in a very long time. Think about China for the first couple of weeks of the year. Volume traded in the A-share market has been at record levels. I mean, last week was just incredible volumes. And I think part of what's happening is global, to your point, but part of what's happening in local. So when I say that, in China, there is a move out of bank deposits in the bond market just because the yields are low. Yeah. And dividend yields on the Chinese market is higher than actually either one of the bond yields or the fixed deposit returns. So you're seeing a reallocation of the savings. This happened in India some time ago, and Japan's trying to orchestrate that too with the return of inflation. So when these volumes come into the market, they add up, and it's a pretty good environment. And then on top of that, you've obviously got the geopolitics and the volatility associated with the geopolitics, and that adds to the mix. So it's really a global-local combination.
Yeah. Right. And I mean, you mentioned there are specific Asia stories that are adding simply positive Asia stories, right? Whether that's the Japan side, the India side, which hopefully will come back even further, the China side. And I wonder, from a capacity standpoint, any Bloomberg interview with the bulge bracket won't be complete without me asking you about headcount. So what are your plans around headcount, whether or not you're happy with your capacity?
So two things.
Yeah.
One, we've got a pretty well sort of built out footprint.
Okay.
But if this volume trend continues, headcount's going to grow. There's no question. Notwithstanding, technology now allows us to do a lot more with the same number of heads. There's no question. I mean, when I'm trading, if Stock Connect, we were trading $5-10 billion a day. Now we're trading $15-20 billion a day. That does not require me to
That's
put
not
in
linear. Okay.
more heads. That I just invest in the plant and I invest in technology, and that allows me to scale the business dramatically. But the wealth management business is growing, the IPO business is growing, the M&A business is growing. That requires heads to prosecute. So, to the extent that this trend continues, I think we're going to continue to build the footprint over here.
Okay. In terms of roles, though, what do you think is still what you need in this region here right now?
Look, we love our wealth business in the region.
Okay.
So if you have any financial advisors that want to come join us, please let me know.
I'll send you the resume.
Yeah, we got some CVs that are thrown our way for whatever reason.
Yeah, we're looking to build that out.
Okay.
Obviously, capital markets professionals. We're looking to build that out. We're looking to build our commodities business in Asia out.
Okay.
So there's areas where, for us, markets become interesting if they have scale. And there's a bunch of markets in Asia that have scale, but also as they deregulate and you can do more. So as we can do more, we look to fill those footprint gaps with quality talent.
Yeah. To ask you about Japan, you have a long-standing partner there, of course, in Japan. Are you happy with that footprint?
Oh,
because
yeah.
that market's really come back, arguably in a bigger way, in a bigger scale than where we are as far as the greater Chinese market is concerned, right?
Well, you've heard Ted speak about it. I mean, our partnership with MUFG is special, and it's something that we seriously value. And we've been partners with them now for almost 2 decades. And with everything that's going on in Japan, both as a return to inflation and nominal GDP growth, but also corporate reform matter, that footprint and that platform, I think, is very differentiated. So it allows us to do more.
Yeah.
It's complementary in terms of their footprint, our product skills, and the intent is to continue to grow that. And as you know, we're doing more with them. We've brought together our equities practice, we've brought together our FX practice, we're going to get into power trading. Again, as we can do more there, that partnership is very special and unique, actually.
What is your overview of the volatility that we've seen across JGBs and the yen? I mean, there's talk of maybe even possible coordinated intervention from the U.S. and Japan. Is this sort of just, real concerns on fiscal sustainability, you think? Or is it just kind of an economy that's really just reflating and exiting out of decades of stagflation that, investors really have to really contend with now?
Yeah, that's a great question. I think it's the latter. My own view. Look, we're not concerned about fiscal sustainability in Japan. I mean, the deficit is not that big. They've delevered substantially over the last several years. This was much more, who's buying the long end, where Japanese insurers, and by the way, Japanese debt is mostly owned by Japanese domestic institutions, but they buy 10 to 30. They don't buy 40. So there's not a lot of liquidity at that part of the curve, and that caused the move, and obviously that creates nervousness. But I think it was an idiosyncratic event. We may see some volatility associated with this over time, but we're not concerned about Japanese fiscal. As you point out, it's an economy that's reflating. Some of it is political in terms of the deficit expansion, but that's happening in almost every part of the world right now. Yeah.
Gokul, thank you for spending some time with us this morning. We'll speak to you again. And we'll send you the CVs if we get. We'll filter some. Let's see. Depending on the quality, say hi to your team for us, of course.
Thank you, guys. Thank you very much.
Gokul Laroia there, of course, Chief Executive Officer for the Asia Pacific at Morgan Stanley.
Yeah, our coverage of the Asian Financial Forum continues throughout the morning. Of course, in the next hour, discussing investment strategy with Federated Hermes, and later going to be hearing from the CEO of the World Gold Council and Blackstone Private Wealth's APAC head, Ed Huang. This is Bloomberg.
Okay, just very quickly, we're looking at just markets, the state of markets right now. And yeah, that's it. Well, you might have heard us thank, of course, the Morgan Stanley CEO. Of course, being
live TV.
Diplomatic,
My
polite, and
apologies.
being a nice person. It's a good thing we didn't talk about that. I'm kidding. Okay, let's have a look at the Japanese currency. I mean, we ended really the conversation really on the Japanese currency and the strength we are seeing there. in that specific market. I believe we are, if not at session lows, if not very close to it, on the lower end of 154. Asian FX, dollar weakness across the board. The ringgit, the Singapore dollar, you probably saw that headline across your screens earlier on. You have the South Korean currency and also what you have as far as the Taiwan currency is concerned. And the broader read across equity markets is, I think this one is fairly nuanced, where you really are seeing the effects of a stronger yen in the equity market. And as you can see, that really is the standout to the downside, which seems oxymoronic, but that's certainly the state of play. Asia Pacific, they were up 0.4% on a benchmark basis. Okay, let's talk about Japan in greater detail. You had the speculation, of course, of whether officials there will intervene to prop up the yen. Leaders from both ruling and opposition parties are set to face off in a debate later today. Now, this really comes ahead of a snap election slated for Feb 8. That's key, folks. That's within the next 2-week window. Let's bring in our team here. Senior Japan economist Taro Kimura and Tokyo economy and government reporter Erika Yokoyama. Taro, let me start with you. Given the news flow on the weekend, top of mind for you as you walked into the office this morning, what do investors need to understand?
At least investors needs to understand it's really a significant development when it comes to U.S.-Japan lockstep on watching the dollar-yen rates. Of course, you can argue it's not as much as the Plaza Accord back in 1985, but I would say it's a movement that we haven't seen since 1985. It seems to my eyes that they haven't actually intervened, but they did something like a rate checks. There's no confirmation. It's just my view, and it's a step just before they are actually trading the currencies. So my argument is those countries collaborate to intervene to FX market in the past history only when it's crisis. And it's, of course, there's a JGB jolt, but it's not Japan's crisis. I think in the big picture, Japan's surging yield is, in my view, it's a healthier momentum that the Japan's recovering the nominal growth. And so that's why U.S.-Japan authorities are sort of stepping in modestly and show that they are watching the speculative move carefully, and then we can intervene. We can make a historic move when it's necessary. It's a sort of big policy signal, currency policy signal for currency authorities.
So, Taro, can we call this kind of the new Plaza Accord? Have we reached a top when it comes to dollar-yen now?
Of course, we can argue in many forms, but I think it's a significant. I'm super surprised actually by the rumor that the New York Fed is intervening. I haven't seen it in my career. It seems that they actually intervened to buy the yen in 1998, but at that moment, Japan had a domestic financial crisis coincided with Asian currency crisis. So they were in crisis mode, but barring from those situations, we weren't able to imagine those collaboration could happen in this sort of non-crisis circumstances.
Erika, let me bring you in, and let's look ahead to this specific debate. What do we need to be paying attention to there later today?
Mm-hmm. We do have the party leaders' policy debate as the Japan enters the snap election scheduled for February 8th. And there are multiple talking points, but the main focus should be clearly the cost of living, especially the proposed sales tax cut. We had the latest CPI figure for the nation on Friday, which showed the key gauges stayed well over the BOJ's 2% target, even after Takaichi's sum measure was implemented. And real wages have been falling for almost a year, so public frustration has been still pretty strong. And most parties, including the LDP, are now proposing some form of the sales tax cut. But the latest polls actually suggest that so far, consumption tax cuts are not well received by the public, with over 50% saying they are not effective measure to ease prices. So the LDP and the other party leaders need to convince voters. by providing more details on its impact. But at the same time, of course, they have to be really careful not to sound too expansionally after the proposal caused JGB market meltdown last week.
Yeah, I mean, given the volatility we've seen in yields, Erica, how concerned do you think the government is on the JGB market now?
I actually think the governments are really concerned and now trying to calm the market. It's even prompted the warning from the U.S. Treasury Secretary Scott Bessent last week. He said the Japan's bond turmoil had spilled over the U.S. market as well. Since then, Finance Minister Satsuki Katayama emphasized that consumption tax cuts are going to be just temporarily and only on food, and the funding would come from non-tax revenue or some spending reform, not a new bond issuance. And Takaichi herself also issued real warnings to the market in the policy debate yesterday. So far, the market seems slightly have calmed down, but volatility is likely persist. So careful messaging from the authorities is pretty much important going forward this week.
Team, thank you so much. Fantastic. Erica Yokoyama there, and our senior Japan economist, Haruo Kimura, joining us out of Tokyo. If there is any reminder that it's going to be a big week in Japan, we got it a few hours ago, and we'll continue to unpack that market reaction through the course of this today and the trading week ahead. Right, coming up ahead here on the show, Goldman Sachs Private Wealth Management ahead, joining us, telling us what the wealthy clients of the bank are, their preferences, given, of course, all these things going on, plus this continued push up in precious metals and alternatives. That's ahead. This is Bloomberg. All right, massive move in the yen today, and as you can see in the last few minutes or so, we touched session lows in dollar yen. Call that a 1% move in the Japanese currency, which obviously we don't see every day, but these are not normal times given the moves we did see on the weekend. Following this, it's also, there's stories across this whole flurry of Asian FX today.
Yeah, we saw it first with the Malaysian ringgit, and now we have another headline crossing the terminal when it comes to Sing dollar, extending that gain here to now the highest we've seen for the currency since 2014. So the broad sort of move is, of course, a weaker dollar across Asia FX here today. You got to wonder, right, what's going to be the line in the sand now? And I think you heard from the likes of State Street, Masahiko Liu, 162. That could be the line in the sand for the market here, because historically, when you look at what the MOF does, when they are doing rate checks, he says, that is a precursor to action. So if they fail to follow through, that might add to more speculation on this market here. So certainly we'll see if we see any sort of follow through come through here.
And that's where things in some ways ironically become tricky, because when you do get direct intervention in the markets, you will rarely hear from authorities actually admit that they intervene in the markets.
Yeah,
you normally
and you won't know until
the data comes out, and then you can extrapolate based on what the BOJ's holdings are. I can also tell you right now, about 15 minutes to the close of the cash markets for the morning session, because of the strength in the Japanese currency, the Nikkei is now pushing towards session lows. We're nearing 2% to the downside. We opened about 2% lower, but since that point in time have reversed, but now are testing the lows for the session. We'll continue to track this, of course, going into the lunch break there.
Yeah, plenty to talk about when it comes to not just what's happening here at the Asian Financial Forum, but there's also Goldman Sachs' Global Macro Conference that gets underway here in the city tomorrow, right? Our next guest is in town for the event, managing nearly $2 trillion for the firm's ultra high net worth franchise. And she's standing by with our Chief North Asia correspondent, Stephen Ingles. Steve.
Yes, she's not here only for that event, also the Private Wealth Management Investor Conference, another event as well, and dinners as well. It's going to be very busy for our next guest. Let's bring in Meena Flynn, co-head of Global Private Wealth Management at Goldman Sachs, as well as co-head of One Goldman Sachs.
Thank you, Stephen.
Thanks for coming in this morning. So what's overwhelmingly going to be the main question you're going to be fielding from those private wealth or high ultra wealth net worth individuals when you meet with them today, this afternoon, and tomorrow?
Yeah, I think the number one question on people's minds right now is, do I continue investing in markets right now? Right. How do I think about valuations? And what we gear our clients to really focus on, and it's really the first thing that we do with our clients, is portfolio construction. Right. Our clients come to us wealthy. They want to stay wealthy and they want to grow their wealth so that they can, and they really take this multi-generational approach, and we help them to implement that by, one, like I said, focusing on portfolio construction and then thinking through what are really unique ways that they can implement that in both private and public markets. And so that portfolio construction, that irrespective of the volatility that takes place in the markets and the questions that we're getting, really keeps them grounded and allows them to stay the course with the main goal of, again, preserving wealth and beating inflation, as well as really being able to take advantage of dislocations and actually add during periods like that.
So what is the answer to the question of whether bubbles are forming, whether risks are forming into this new year? Because we've had one heck of a run with the Mag 7 and beyond in the public markets.
Yeah, we definitely have had a significant run. And to your question on a bubble, I think the number one question we get from clients is really, how do we think about investing with valuations where they are right here? And to put a finer point on that, valuations have been in the 10th decile since December of 2016. Since that time, the S&P has returned over 200%. So valuation matters. And when you're starting at a high place, you have to have a much higher, greater probability that you're going to get a drawdown. We think that there's an 80% probability we're going to get a 10% drawdown. We want to be able to react to that opportunistically. But it's not the main driver of forward equity returns. The main driver of forward equity returns is S&P earnings growth.
So how important is it then to go beyond the Mag 7 and see a broadening out and the broadening out of those profitability as well?
I think it's really important, and it's actually what we're seeing. We saw over the last 4 months, we're seeing year to date, is you're really seeing the equal weight of the S&P as well as the Russell 3000 outperforming the S&P 500. And so the Mag 7 are doing fine, right? They've still got earnings growth that is 20% plus. They've got ROEs of 60%. So they're able to heavily invest in their business, protect their moats. They've got the scale to continue to reinvest. That being said, what you're getting from the other 493 is a significant pickup in earnings, almost a double of earnings this year to go from 7% to 12%. So what we are expecting is that you will get more of that broadening out, whether that's coming from very healthy consumers, corporate balance sheets, some of the items out of the One Big Beautiful Bill that are going to really keep propelling the spending.
How much does, I would guess a lot, geopolitics right now play into maybe the risk appetite of these high net worth individuals? And also, if we could pivot to this part of the world, the family offices that are looking for diversification, but also a little bit worried about a lot of the noise that's out there.
Yeah, and that's the thing, is that we know that there's these risks, whether geopolitical or otherwise. We don't know how much they're going to materialize, to what extent, as well as when they're going to happen, which is why, again, we ground ourselves on having portfolios that can withstand whatever might come our way.
Where are your efforts focused on for those family offices? Because we're also right now in a generational shift, whether it's first to second or second to third. Maybe the new generation have different risk profiles.
Yes. So to your point, we are in the middle of a significant wealth transfer. And what that looks like within families right now is that the wealth is first transitioning horizontally, usually from patriarch to matriarch, given the different lifespans, and then second to the adult children. Many times when the primary decision maker from a financial perspective changes, their goals, their objectives, their risk tolerances change. And so we are seeing more interest in alternative investments, as well as thematic investing. So what are the structural themes that are really going to outperform over the next 5-10 years? So whether that's robotics, cyber, defense, healthcare innovation, of course, AI. So we make sure our clients have exposure to trends like that. And then these clients are also looking for a more digital and seamless approach, and one that's really coordinated across their advisors, whether that be tax, legal, investment advisor, and we look to play that quarterback role for them.
I did see an October survey of your clients found that 58% of the family offices expect to be overweight portfolios to tech in the next 12 months. Given what you just said, 58%, is that under expectations, or is that about what you would expect given the returns we've seen in the AI space?
Yeah, so the beautiful thing is that we have in our clients' portfolios roughly about 70% of an allocation to risk assets.
Yeah.
Within those risk assets, 25% is to private investments. A lot of the exposure that our clients has, whether that's to technology or other high growth opportunities, comes in those private areas. And that's where, quite frankly, there's a ton of value creation because these companies are staying private longer, as well as the fact that they're not going public for multiple years. And so we look to have exposure for our clients, whether it's to technology or otherwise, both in private and public markets.
How about alternatives? Gold, spot gold just hit $5,000 an ounce right now. Gold, crypto, we can touch on a number of different ones.
Yes, and so gold and to some degree crypto is something that our clients look to more as a safe haven from a political disruption perspective, or to the extent that they're worried about a dollar debasement. Gold really is benefiting from the fact that central banks are starting to diversify their reserves, as well as that the Fed has been cutting interest rates, so the opportunity cost of holding gold is not as significant as it once was.
So what is your top piece of advice to them who come to you and say $5,000 an ounce right now? It's been a one-way trend of late. Do you build up your positions in gold?
I wouldn't be building up our positions in gold. I would actually really be looking to continue to build a diversified portfolio. And the main reason why is because if you think about how much does it take to get gold out of the ground? What is the true value of gold? And yes, it is a gauge of fear that investors go to in terms of when they are worried. But the cost of mining versus where it's trading right now, there is a big difference there from a valuation perspective. So completely appreciate why clients want to have an allocation there. But again, we're recommending that our clients in our entire portfolio stay invested, and they continue to invest over a 6 to 18 month time period.
What's your top view then on the China market? I mean, we've seen for quite a few years this outbound trend where the high net worth individuals, maybe they were too exposed to property, which is a big part of the Chinese economy. They're looking to diversify, but also we've seen some strength in A shares.
Yes. I would say investors are really optimistic or excited about the innovation in China in technology and in areas like biotech. We were coming off very low valuations, and so that the innovation coupled with the valuations did provide for a good amount of upside to the market. For that to continue for these investors globally, we do think that you need to see earnings growth, and that's predominantly what we are looking for. I've been coming to the region for the last 15 years, and I would say over the last 15 years, we have seen our Asian clients focus really on global diversification. Right. That does not mean that they don't have exposure to their home markets and a lot of exposure to their home markets, but they're focused on global diversification of equities, but also whether it's in alternatives and even in credit, and being more comfortable with taking maybe less returns for less volatility.
All right, Meena, thanks so much for joining us here. Dave, I'm going to send it back to you. Of course, we have a number of different events. We'll be there at Goldman Sachs conference tomorrow with a number of very top guests. Dave?
Absolutely, yeah. We're trading places. There we go with Steve, of course. He'll be out and about, of course, as we hunker down back into our studios. Well, we'll see. We'll keep some things uncertain at this point in time. Okay, we have a lot of guests coming through as well. Of course, you can tune in, of course, for a specific coverage out of the Goldman Conference, the Global Macro Conference in Hong Kong tomorrow. And Steve has a fantastic lineup of guests coming through, including, of course, the CEO of the bank, David Solomon, will be joining us at the times on your screens. Now, here's the thing. If you are traveling to Japan, you did not change your money at the airport, are on board, and are landing now to find the exchange rate completely what you didn't expect. Well, that's what the term in Mandarin is 后悔, right? I regret.
A little bit of regret in Japanese. I don't know if someone can tell us what that word is, but certainly there's going to be a lot of questions, right? You're starting to see that it is basically the yen strengthening across most, if not all, major currencies here this morning. We are just talking about some of the lines that are crossing here when it comes to Taiwan dollar as well. Obviously, they are watching very closely some of these FX moves. No near-term use of FX reserves reserves. That's the latest from Taiwan, just given what we've been seeing, right? Dollar weaker across the board here. You are seeing some multi-year highs for Asia FX here this morning.
Like the Sing dollar, which did hit the highest, strongest level in 11 or 12 years there, really on the back of these cross-asset moves. Just very quickly, before we go into the Japanese lunch break, a glance at auto stocks, really feeling the pinch. And of course, these are stocks, of course, that derive a lot of the revenues from outside. A big move in the yen causes a big move in the stocks on your screens. Gold stocks, we'll end on this, then we'll take a short break. Gold is bid, 5,107, 106 on silver, and hence this bid we're seeing just about across the board on precious metals, equity plays. Plenty more ahead. This is The China Show.
All right, 11:29 a.m. in Tokyo. Japanese markets are going on break in a moment. Oof. I think we need a break, just to kind of digest some of the price action that we've seen just the last couple of hours here after what was a surprise, right? The pace of which we heard these conversations about possible intervention here and possibly some sort of coordinated sort of moves with the U.S. and Japan. That is what's kind of driving a lot of the equity moves here this morning, given the yen strength that we've seen. And we are seeing now the Nikkei coming to that lunch break here lower by close to 2%.
Yeah, not that it's good travel advice to change your money at the airport because the rates there are typically not the best that you'll get. But some people are probably regretting not changing some of their cash into the yen before they boarded that flight, and they come here and it's like, what, a percent or two stronger. But yes, it's really the big market story we're tracking today. In fact, the Nikkei is off 2%. The rest of the region, though, is interesting because it is leading to broad dollar weakness. And a lot of these currencies hitting, hefty superlatives, right? Like the Sing dollar, for example, was hitting the strongest levels since 2014. The equity market weakness, though, does seem to be largely confined to Japan. You do have some weak spots here and there, but we're still up on the benchmark. I think something to contend with. It's Fed week, right? So we'll see how they frame. You have personnel changes on top of course, the exercise of monetary policy, the feed through on inflation from the tariffs, among the many other things we're trying to figure out.
I think we're still waiting, maybe possibly this week, some sort of announcement on who the Fed chair is going to be from the Trump administration. I think it's really kind of...
It's not you, is it?
It's very interesting. No.
Okay.
But they were talking about... I love the headline that came out last week about finding the next Fed chair is now finding that elusive unicorn because there's just not one contender that can actually appease the market and also, of course, the Trump administration at the same time. But certainly it's going to be a lot to talk about here when it comes to China as well, right? When you talk about the slow bull market that regulators and policymakers are really trying to engineer, when we talk about what we've seen, the cooling measures of late, whether it's kind of the offloading by the national team of ETFs, margin financing, which has been tightened as well. Joining us now from our BI team is Marvin Chen. Of course, he watches all things China markets for us. Marvin, China wants a slow bull market. Can you tell us exactly what that means, really, how they're going to achieve that?
Yeah, I think, regulators are really looking to kind of lower volatility in the markets and kind of move away from the big up and down cycles that we've seen previously. So one way to do that is lowering the leverage in the system, and that's what we've seen with the tightening of the margin requirements earlier this month. The other issue that this helps address is that, if policymakers need to further ease liquidity or provide more policy support, they want to see this liquidity flow into the real economy instead of financial markets. So, even though quant traders or high-frequency traders may not like the lower volatility, ultimately the goal is to reduce risk for the average household investor, and that's what policymakers are aiming to do.
Marvin, can I ask you about margin debt, margin balance? I mean, certainly one of the things that Yvonne pointing out, of course, was raising, the ratio there. And I wonder, the balance, when you look at it, it's still quite high. And I wonder, is that a reflection of efficacy of the policy? Is it a concern that investors should be thinking about a further tightening along those lines? How should we be thinking about that risk?
Yeah, I mean, if we look at the absolute value of the margin balance, it is at historical highs and higher than the levels of the 2015 margin crisis. But if we look at it as a percentage of the A-share market cap or turnover, The margin balance has been fairly steady at 2.4% of the market cap, and this is compared to over 4% back in 2015. And as a percentage of turnover, it's roughly 10% of turnover, roughly half the levels that we saw during the 2015 crisis. So, the A-share market has grown quite a bit since 2015. The total market cap now stands at over 100 trillion yuan. So as the market grows, we do expect the margin balance to rise naturally as well.
How do you think the policy has impacted market sentiment, Marvin? Are we seeing a large negative impact?
At the beginning of the year, we got off to a fast start. Our sentiment indicator was showing kind of exuberant levels, which does signal some overheating of the market. So I think the policy does come at a right time. Our sentiment indicator has fallen back into a balanced to enthusiastic zone. So I think this reflects that there is some expectations that there will be catalysts on the horizon. Mainly looking towards the earnings season and potentially some further easing in the coming months.
Marvin, thank you so much. Marvin Chen there out of Bloomberg Intelligence is helping us understand where we are in the slow bull market and whether or not some of those things are a problem or the market's taking them in stride. Okay, let us take you straight back, of course, to why we're here at the Asian Financial Forum. It's the annual gathering, of course, that kickstart the calendar year. Joining us here on set, Federated Hermes has announced plans to open an office. Where else? Hong Kong, of course, if that wasn't clear enough. To capitalize really on this growing wealth market and, of course, this bull market that we're in. Joining us here on set is the Global Liquidity Market CIO, Deborah Cunningham, has visited us. You arrived yesterday?
Yes.
Okay, and we're all okay as far as jet lag is concerned.
What is jet lag?
Oh, there we go. Powering through it. So what is this big announcement?
The announcement is that Federated Hermes has planned in 2026 to open an official office in Hong Kong. We have been active here now for the better part of a decade with family offices, with institutional clients, with private banks. And our thought process is at this point it's a key center for us from an Asian expansion standpoint. So we're opening an office.
What can you do differently with an office than you couldn't before? I mean, are you talking about putting more people to be based here now?
Absolutely. There will be more people. There will be more products. And ultimately, the beginning of the process is getting the appropriate registrations, the appropriate licensing for those who will be here on a full-time basis. So slow beginnings, but with high expectations.
Do you know how many people will be based here eventually?
We're rolling it out on a person-by-person, product-by-product basis. So I can't tell you an exact number, but it's more than we have today.
Right. Well, yeah. There we go. Well, okay, let's talk about the here and now and trying to understand, obviously, why you're here. The markets they've done well. Most asset classes have done well despite all the uncertainty out there, and one of which is the Fed. Personnel changes are normal. Some are expecting this personnel change to be fairly counterintuitive to what we're used to seeing out of the Fed. Do you think Fed independence is an issue that we need to contend with?
Well, it's certainly a lot more contentious than what we have dealt with historically from a Fed chair change. So I do think there's an expectation that perhaps Chair Powell, whose term as a governor doesn't expire till 2028, might stay on because of that contention. Right. Now, there are 5 chief contenders that we know for his job, all of which have been the named person over the course, and they've been the unicorn over the course of the last month and a half or so. Yeah. Right now, that seems to be Rick Ryder from BlackRock. Now, whether or not that comes true or not is a question. Ultimately, I think each of the 5 have pedigrees that will not allow them to compromise the independence of the Fed. It's been a separate type of institution since its formation, and that formation, even through this current administration, has been protected. And I do believe that will continue to be the case, despite the fact that there will be different personnel directing it.
There's been a lot of talk about just the policies that we've seen from the Trump administration, whether it's Greenland, the like, and I think the tensions that we're seeing in transatlantic with the EU. There was a lot of talk last week about whether the Europeans would weaponize their holdings of U.S. assets. Do you see any of that happening in any?
You know, it really doesn't seem like that's the case so far. I mean, if you look at currencies of the world, if you look at government traded bonds of the world, none are the size of the U.S. dollar market or the Treasury market. And ultimately, they still represent what I would call the flight to safety trade, even if they are part of what the concern is with regard to the safety. So it's not something that we think is going to be the story of the decade or even the story of this year, but there will be rumblings, I think, around specific situations, Greenland being one of them, although that seems to have now taken a little bit of a back seat. I think the next thing we're worried about right now is more internal to the United States, which is potential for another government shutdown, which is different than a debt ceiling issue. Debt ceiling issues are where there's concerns about whether Treasury is going to be paying. In the context of a government shutdown, basically the impact on the market is just lack of data, lack of economic information that's provided. So it's not as consequential as a debt ceiling type of issue, but it's still, you know, it's kind of the Fed as well as the markets flying a little bit blind.
Right. What's your major assumption around global liquidity this year? And really core to that is the pricing of the U.S. dollar, which has been fairly weak.
It has been weak against certain currencies. It's been weak pretty much against the euros, and that has a lot to do with where interest rate policy has gone. It's gone from 5.25% down to 3.5%, and ultimately that 175 basis points, from a pricing perspective, has come out of the currency as well. Having said that, our outlook at this point, from a Fed standpoint, is for one, maybe two moves additionally, but with a terminal rate that's still 3% or above, which ultimately, if you're in a fairly low inflationary environment, which we've gone from 6 to 5 to 4 to 3. We're not at 2 where the Fed wants us to be. But having said that, I think that it'll ultimately still, allow the value within the 3+% environment to be held.
Yeah, and I think that's the biggest surprise that we saw last year was that U.S. growth has proven to be quite resilient in many ways.
The consumer is strong.
Yeah, but there is still this lingering concern of U.S. exceptionalism that is fading, and I think you've mentioned about this in your outlook as well. What do you see as the immediate sort of knock-on effects that could have?
Well, I think what we've seen and what we're likely to continue to see to some degree, although policies maybe are mitigating some of that, is the K-shaped economy, where the consumer that's employed, the consumer that is doing well from, a compensation perspective is spending. They're not afraid to spend. They're spending small items. They're spending services. They're spending large ticket items. But then there is still a portion of the economy that from a protection standpoint is on the lower end of that. And that part is not recovering as much, which was one of the purposes of the tax bill, the one big beautiful bill that was passed last year, is supposed to, in fact, impact that lower rung of consumer spending to allow the footing from a stronger economy to be felt across all classes, not just the middle class and above.
You could really make a strong argument that rates should be higher or should be lower.
You could.
The pricing right now in the 10-year, for example, where do you think the next big move is going to be, up or down?
We are at 102.5% from a duration call perspective.
Okay.
So we're not all that far off of, what we would be calling our neutral call.
Okay.
Immediate next impacts, we think, might be that the price goes a little bit lower, but with still concern that, the overall pricing mechanism and yields go in the opposite direction as well. So no big bets at this point, thinking that where we are is probably around where we're going to stay.
Debbie, it's good to have you here in the region. Deborah Cunningham there, Global Liquidity Markets CIO at Federated Hermes. We're still checking FX here. Just we've seen basically this rebound in the yen being more pronounced in this last hour, right? I think it was 1% sort of gains that we saw against most of the pairs here. You take a look at what it comes to dollar yen here right now. We're at 153. Levels, so we just broke in below the 154 threshold here this morning. Dollar continues to weaken here. Sing dollar is at the highest we've seen since 2014. Malaysian ringgit also the highest we've seen since 2018. This is Bloomberg. All right, we're checking U.S. assets here this morning. So the yen certainly is leading to the dollar to weaken substantially here. We're also watching when it comes to U.S. futures, some pressure here, some pronounced moves to the downside here. So it looks to be a pretty interesting open for Wall Street on Monday. But certainly there has been some concerns with what's been going on in Minnesota, where U.S. Democrats now are threatening a potential government shutdown following another killing by ICE agents in Minneapolis. For the latest, let's bring in our deputy managing editor, Balazs Pence. He joins us from Hong Kong with what to expect and what the Democrats are really thinking at this point, Balazs.
Well, Yvonne, it seems like we're only a couple of months removed from a record shutdown in the U.S., and we're back again here talking about a very similar situation, although it must be said that this time, if there is a shutdown, it would not be a complete shutdown. Like last time, we're talking about these annual appropriation bills, which Congress has been working through. 6 of them have been approved already. There are 6 more waiting. And what the Democrats are saying, they cannot go along with the funding for DHS, with the funding for ICE that the Republicans are asking for after the scenes that we've happening and after the news that have been coming out of Minnesota. So they want to slow things down, and they actually want to separate DHS funding from the rest of the funding bills, and it remains to be seen whether that's even possible procedurally. There's only a few more days left until the deadline, so they are working with a very, very short time period to try to get this solved. There's still a lot of tension there, and it doesn't look like the Democrats are budging at this point.
And what do we have to watch out for next? Obviously, there's a lot of talk about, is there any sort of off-ramp? I mean, you're seeing so much protest on the ground there and anger on the streets given the ICE presence there in Minnesota. What are some kind of signs of what's next?
Well, what's really interesting is how immigration is being reframed politically by what all Americans are seeing in Minnesota right now. Until now, it seemed like immigration was a great issue for the president and a great issue for Republicans. They consistently polled more favorably when it comes to that. And right now, that seems to be changing, and that's what the Democrats are seizing on. And that's why we're seeing some Republican members of the Senate also wavering a little bit in their support for this bill for the DHS and asking for investigations, asking for an independent inquiry into what happened over the weekend as well. So it looks like the political climate around immigration and particularly around the ICE operations is changing. And if that's the case, then the Democrats might have more leverage, might have a little bit more leeway to force changes with these appropriation bills.
Balazs, thank you. Balazs Pence, our deputy managing editor, joining us there in our Hong Kong studios. As we kind of take a look and keep track on other news that we're following for you this morning, China's top general is reportedly accused of passing secret information about the country's nuclear weapons program to the U.S. And that's according to the Wall Street Journal. Zhang Youxia is also accused of accepting bribes for official acts, including promoting an officer to the post of defense minister. The report goes beyond China's announcement on Saturday that it was investigating Zhang. Myanmar's military-backed party is poised for a landslide victory in the final phase of a controversial election. The regime-backed Union Solidarity and Development Party has secured more than 85% of the contested seats in the first 2 phases. Critics have called the vote neither free nor fair, as it excludes opposition parties and conflict zones. Vietnam's new Politburo has been revealed as the Communist Party Congress wrapped up in Hanoi. To Lam has been confirmed as General Secretary and also appears to have secured the presidency with seemingly minimal backroom wrangling. The nation's top positions are selected from the 19 members elected to the party's most powerful decision-making body, which sets overall policy direction. And while putting more ahead, this is Bloomberg. I don't know if you were watching. I was watching on just tenterhooks. Oh man, just the nerves of watching Alex Honnold completing his free solo ascent of Taipei 101 on Sunday. There was some weather concerns, right? That's why they postponed it. But he scaled a skyscraper in a risky event, and it was streamed live, Dave, on Netflix. It was amazing to watch.
I don't think I've ever been
That nervous?
that nervous, stressed. Not borrowing a phrase from Eminem, but my palms were sweaty.
Mom's spaghetti.
And I can guarantee you, yet Sunday, that was probably in the history of Taipei 101, the building, probably had the most people on record on a Sunday. Because almost every floor...
That was my favorite part of the whole thing.
Everyone was waving to him.
Everyone wanted to take selfies with him every floor.
Yeah.
I'm sure that was a bit of a distraction for him, but apparently this is easy for him, right? I mean, he's used to climbing caves and whatnot.
Yeah.
But yes, he is the first to do so without a rope. All the way up 101 floors here, of course. Certainly it's going to be a really interesting one to watch because it kind of puts this whole sport, I guess you could say, right? Netflix is really kind of doing this live for the first time. I mean, it really kind of puts climbing the like here really in the spotlight.
It really does. Have you seen how much they were compensated for this? I mean, not that, of course, but he's free solo del Capitan, of course, which is one of, I think most people have also seen that. But it just, yes. I mean, and I was actually joking and bantering, So this is like the second hardest challenge in Taiwan to scale. The next one would be try and scale the chart of TSMC. And see
also in a sense.
also quite in a sense to the upside. But yes, he got there. But yeah, well, I guess takes us back to markets.
Congratulations to him.
Fantastic.
And you could see him. He looked like he was just genuinely just trying to take in those views of Taipei from the very top.
God.
Of course, it used to be the tallest building in the world from some time, but then it was overtaken by the Burj Khalifa. But then again, there you go. What a sight.
Maybe that's next.
Certainly, when it comes to cents, we've been talking about the dollar-yen trade, and it seems like today we've actually hit a bit of a peak, I guess, or at least for now. We'll see.
Yeah, quite a big jump in the value of the Japanese currency. It's up against most everything, with the exception, last I checked, against the Korean won. But suffice to say, yes, we are at 154, 153, in fact, a few moments ago, if you're just joining us today. And it's really caused this broad swathe of dollar weakness across the board, and it's really given something us to talk about if, in fact, of course, it's a rate check or said to mull a rate check, and whether or not direct intervention is still needed, given, of course, the moves that we're already seeing in these markets today.
Well, people said they have to kind of follow through, right? When you're talking about rate checks,
you better pull the trigger.
Done from the Fed, the New York Fed, as well as the Bank of Japan. You better follow through, or else you're gonna see more weakness. And maybe 162, according to State Street, is going to be that line in the sand of when they actually do take some action. So lots to watch here. Of course, this is post BOJ, pre-Fed, right, this week. So certainly there's a lot on mind. We're still talking about north of 5,000 for gold.
Yeah, that continues to be the story. And, I remember still people talking about silver at 70 was expensive, and we're 110 as we speak. Okay, we will leave it there for now. We have lots more coming up here, of course, out of the AFF. Lots more interviews here on the ground. But from the China Show, that's it from us. And we'll see you all tomorrow. Plenty more ahead, though, on Bloomberg Television.